Hello and welcome to another episode of Monday Markets. As always, you are brought to you by Woo. Links available in the description below. Do not keep any more funds than absolutely necessary for trading on any given exchange. The whole point of leverage is to allow you to reduce your counterparty risk and trade your normal position sizes without needing to keep all of your collateral in one place. So with that out of the way, thank you for the support recently on Casual Friday. That was a fun episode to record. And here we are for another week of scintillating price action. So we have 5 days until the monthly close. The focus from the start of this month and even last month was this monthly level at 27.2. As discussed, this is monthly resistance, and now that is showing up on lower timeframes as well. If the monthly closes like this, I don't think there's anything particularly positive to be derived from it. I think that would just look like a bearish retest on the monthly timeframe. And as always, the more interesting monthly levels are lower down at 23k and 20k. If you want to make a bullish case, I think you need to get through this entire monthly cluster between 27.2 and 29, and then you can make an argument for monthly resistance as opposed to monthly support at 35 to 38. But for the time being, what we have is a lot of midpoint trading between the two high time frame areas, and that midpoint trading looks to be more bearish than bullish given the breakdown and subsequent retest. So some high time frame context to bear in mind there. We also discussed the weekly time frame. That's also at resistance, or at least reacted to resistance last week. The levels that we discussed were derived from this pre-breakdown cluster between 26.7 and 28k. And as you can see, the market pushed in quite high actually, all the way into the range and into the range midpoint at 27.4. And again, the monthly level is at 27.2, so we went over how much confluence there was there and closed below the range low as well. So the cluster continues to be resistance. I think if you wanted at least a semi-bullish case on the weekly, the market could have closed above the lower boundary, so above 26.7, and then you could at least make an argument for trading the midpoint of the range and then the range high potentially. So this would have served as some sort of reclaim. Instead, we pushed into the mid, but actually closed below the range low. So that's pretty bearish retest as far as bearish retests go. The only other context that I think is somewhat helpful on the weekly is the short-term trading range is between the range low that we fell out of at 26.7 and the range low where the original failed breakdown materialized at 26k. That's pretty narrow. You'd be forgiven for ignoring it completely. I think, again, the bigger picture and the overall context is that the last week, or this past week, the market pushed into resistance and was rejected. So that's not particularly good. On the daily time frame, the picture isn't too different, which isn't particularly surprising. I think our focus was on this daily cluster here between 26.9 and 27.4. So again, we see the same levels coming up, 27.2, 27.4, all these monthly, weekly, daily resistances. And on the daily time frame, as far as resistance goes, it's somewhat a mirror picture of what happened on the weekly, where the market tested sort of the level itself up at 27.4, but since then closed through the bottom layer of support at 26.9 and sort of moved lower since then. I think this is a tricky area to look for sort of higher low structures or supporting structures, sort of around 25 to 26k. I think if you want to be bullish from a higher time frame swing perspective, getting above 27.4 would be welcome. I think we now have plenty of evidence that it's a meaningful level of resistance. We know that that's monthly resistance. We know that's the weekly midpoint. We know that's the daily range high. So if you wanted to make a case for the higher timeframes cascading into something bullish, and you wanted to be semi-early to it, I think 27.4 is the area to look for that. As far as support, I think that's somewhat trickier. What we essentially had, and the catalyst from a technical point of view for a lot of this rally, was the failed breakdown around sort of 25.7, 26k, depending on how you want to slice it. I think that area is best highlighted on the 4-hour chart, as we'll discuss momentarily. But in terms of nearby trading levels, given this is a weekly show, I think the ones I've got on my personal chart at least are this daily range high at 26.4, all the way up to the sort of pre-breakout consolidation at 26.6. So that's a $200 range there that's reasonable. If we look at the price action around that range, we essentially had a rally through it, a retest of high time frame resistance, and now we've sort of fallen back below it, and this is resistance once again. So my focus for the next sort of 1 to 3 days at the very least is 26.4 to 26.6 as a pivot, with that being the nearby resistance. And again, if you're looking for swings, that has to come a bit later, probably above 27.4, which is the aforementioned monthly confluence. But in terms of just like laser focus, what do I think are the relevant trading levels? I think as far as resistance goes, it's 26.4 to 26.6, which is this daily consolidation that's now above us. And on the support side, it's a bit messier, and it's also contextually tricky because of this high time frame rejection from multi-time frame resistance. But I think when you have failed breakdowns, at the very least, they give you a clear invalidation. And the reason for that, as we've discussed many, many times on this show, is that double failed breakouts are quite rare. So if we had a range here, we've already broken down from it once. So if the market were to break down below it again, I would assume that it's not another one of these, but rather a precursor to the real move lower, so to speak. So in terms of how to, where to draw that line exactly, I don't think it matters too much. I think something like this would probably do 25.6. You could start to split this up however you like, maybe the pre-breakdown consolidation itself up at 25.8, but it's not really the exact level that matters as much as the structure, right? So the structure was essentially that we were in this larger consolidation. We're trying to highlight the range low within that consolidation, which falls at around, 25.6 to 26K. So we could just even do something like this if we want to be charitable. We had range low, range low, range low, failed breakdown, move higher. So if the market retests that, that's really your last hope for support. That's where the proximity to invalidation is best, because my assumption will be that if we fail to hold that, that it's not going to be another failed breakdown, but rather a real breakdown. So in terms of a practical trading range, what that leaves us for the purposes of this weekly show, and those of you participating on lower timeframes, which I've been doing more of as well, I think the relevant trading range is 6.4 to 26.6 on the resistance side, and your extremity of support is at 25.6 to 25.8. So that's really the best I can do. Let me know if that makes sense, and hopefully I didn't muddle the higher timeframes and the lower timeframes too much. Let me know if that makes any sense. On the ETH front, the entire structure has been messier. So for example, BTC during its failed breakdown managed to reclaim and rally above the high. So if these two things were range bound, when BTC basically had this portion trading above the range after the failed breakdown, it traded significantly higher, whereas ETH sort of had a messy retest of the same range that it had been trading within and sort of bled back down. So relative weakness essentially continued. ETH BTC's been up a little bit over the last few days, but higher time frame, that trend is still intact. So really, I haven't been focused too much on ETH, to be completely honest. Even Catalyst and narrative-wise, I'm sure those of you who follow Technical Roundup on the newsletter and other platforms, you're probably getting tired of hearing this point. But in terms of the good news on the horizon and just narratives and those types of flows, it seems that all the positivity is more Bitcoin-centered than not via the spot ETFs. And I think ETH is really feeling that pressure. And just the lack of sort of gambling on chain and speculation outside of a few outlier examples doesn't help the picture either. I don't really have a monthly view on ETH. I think if I wanted to, the only level that would matter is the sort of former high turned range low at 1.1K, but that's quite far away from where the market is right now, so I'm not giving it too much attention. In the same vein, if we take the range high at 1600, that hasn't been a particularly good level as far as support resistance flips and breakdowns, but even if you were to take it for what it is, we've now closed back inside it, and we're going to have most likely a second close back inside the range as well. So if you wanted to sort of extrapolate from that on the monthly time frame, it doesn't exactly help you, because if you have 1.1K as the range low and 1.6, 1.7K as the range high, the earliest reasonable monthly area to do business is down at sort of 1400, which is a good level, but for our purposes, that's all quite far away. So not much stock in the ETH monthly, unlike the BTC monthly. On the weekly time frame, I think the minimal requirement, or the minimum requirement to be bullish would be some sort of reclaim of 16 to 1700. That is a fairly unambiguous, former highs, turned lows, breakdown, retest, and that's been the dominant level across the weekly time frame, and we've just been moving lower for 5-6 weeks from that point. And given how sort of important this level is, I don't want to start putting too much stock in levels that are nearby. So for example, you could argue that there's a local range low at 1560. That argument would probably be correct, but it's hard to reconcile that with how close the better level is. So put another way, if this sort of 1700 level is so important, then losing it should lead to a larger move than just, $100 or thereabouts. So I'd rather focus on the levels that I think are more important than not and have a hierarchy of sorts. And for me, hierarchically, 1700 is much more important than anything else nearby. If it wants to move into 1400 as the former all-time high type level, or even down to the monthly range low at 1.1k, all of those are levels where participation can be warranted. But other than that, I think the prevailing theme is the loss of 1700. And until that's fixed, I'd rather wait for lower or wait for reclaims. To me, there's nothing particularly compelling at 1600 compared to the loss of 1700. Hope that makes sense. I think the simplest way to think about it is if you mapped out every single level that could pass as support resistance on the chart, your charts and your trade ideas would be completely untenable because you'd have a level every 1%. So at a certain point, you have to make some sort of subjective determination as to which levels are more important than others, and that gives you space to trade between levels that actually matter. So for me, because 1700 matters, by definition almost, a lot of these 1600, 1500 levels matter a lot less, so I've chosen to ignore them, frankly. So that's what I'm dealing with on the ETH side. And if we look at ETH BTC, as mentioned, the last few days have been better, but that improvement comes on the back of a multi-month breakdown that happened recently. So we had, these are weekly candles, so it's easy to get lost in the passage of time here, but this is a multi-month consolidation that broke to the downside. So a bounce isn't altogether surprising, but as part of the larger trend that this thing has been in, depending on where you want to start sort of measuring from, it's still very much a technical downtrend. So, a couple of good days or even 1 week, especially in the context of a breakdown from the local range lows, I don't think that's enough to really shift anything, too far from where it's been. Altcoins generally remain uninteresting. I'm aware there are some outliers on the high caps like Link. Link likes to be the outlier when the market is weak. It certainly didn't do that in 2022. Maybe this is the start of something, but even then, this is a very miserable weekly chart that's been range bound since June of 22, so over a year now. Now, maybe everything else crashes and Link does what it did in 2018, which is go on this, go off on its own essentially and start, secular uptrend is the term I was looking for, and ignore the rest of the market and do its own thing. But I think you need more evidence to support that argument. And for the time being, if this thing's been in a year-long range, I'm going to assume the range is intact until proven otherwise. So I'm sure there are some reasonable intraday trading opportunities there, but it is very much an outlier among the rest, which are, moving 1-2%. And that's off the back of some bounces after a few rough days. So nothing particularly compelling on the old front, as has been the case for some weeks now. There's been a big move in bonds, and the risk market has felt it as well. On the S&P, I think if you're a bull, you absolutely need 4,300 to hold, which is this monthly level that we discussed on Casual Friday. So far, it's kind of provided a bounce, but this bounce could be tricky. And the reason I say that is because from a weekly market structure point of view, we had a breakdown on the closing basis. So any bounces into 4370, 80 into the high 4300s could end up being bounces into resistance. Obviously, if this week and next week end up being constructive, then this might be our failed breakdown and a bit of a rally back inside the range. But for the time being, the weekly has some obstacles in place. And then on the daily time frame, very much a similar sort of pivot that the market has reached. We are at an extremity, sort of this same price area, range low at just under 4,400. So it remains to be seen whether this breakdown is real or it sort of turns into a deviation of sorts that might lift the pressure a little bit. I still think paying too much attention to risk indices probably isn't helpful. Unless vol really picks up on these things, you start getting some real high time frame melting moves. I still think you'll find to just look at crypto and the correlation is nothing like it was in the past. If anything, I think if the market really pukes, then we might feel that in crypto, but a sort of range-bound recovery on the S&P front will probably be neutral to slightly good. So unfortunately, my view on the risk indices side from a correlation point of view is you have to pay attention to the downside moves more than you'd like to pay attention to the upside moves, because it's more likely that we get affected by the downside than the upside. That sucks, but it is what it is. Until that relationship changes, I think that's a reasonable position to hold. I think that's all I've got. So that's BTC, ETH, and the S&P. Hopefully that was helpful. Just going to go back to the hourly or 4-hour chart here to at least highlight the relevant shorter-term trading levels. Jump back to the start of the video if you want the higher time frame view, which isn't shaping up too well. But who knows? Maybe we can save some of these candles before the monthly close. That's all from me. Thank you as always for the support on Monday Markets. Leave a like on the video if you enjoy the short breakdowns. I do this. I try to do these very quickly out of respect for your time. Which I realize that I'm mitigating right now by rambling on and wasting even more of your time. But nonetheless, I'm going to shut up. Thank you to Woo for supporting the show. There's a ref link in the description if you're looking for a potential venue to trade crypto. All the usual counterparty stuff applies. Don't take our word for it. Do your own research and click around with a tiny account to see if you like it or not. If you have any feedback, let us know via DM or in the comments and we can get it straight to the team. Or just don't trade. That's also an option. That's all from me. Thank you. Hope you had an excellent weekend, a good start to the week, and we'll see you for the newsletter tomorrow and all the usual technical roundup stuff. Goodbye.